What's up, everybody, and welcome to Financially Fierce, a podcast made for young adults by young adults, where we're going to have conversation with experienced adults in fields like homeownership, credit, and professional development, all to make sure that we can get a step-by-step guide to success. With that being said, today we're going to be speaking to Miss Crystal Worrell. How you doing, Miss Crystal? How you doing this morning?
Good.
That's good. That's good. Do you mind talking a little bit about yourself, Miss Crystal?
Sure. My name is Crystal. I am wife of 20 plus years, mom, entrepreneur. My background is dentistry, actually. So I retired from dentistry December of 2022 to become a full-time entrepreneur. So I am blessed and proud to say that I'm able to just do what I love to do, which is really just sharing with people. I own Lock Journey LLC, which is a lock business. And then I am a financial professional to help families save money, build generational wealth, and save on taxes.
Okay, thank you. And based on your experiences, one of the things we want to talk about today is basically what is life insurance?
Okay. So life insurance, I think when people ask what is life insurance, it's so diverse. It's not just a wine type thing, right? So life insurance, it is savings, is retirement, and is living benefits. So a lot of times people don't kind of get all of that in one combo with life insurance, but really life insurance is a way that you can make sure that you can use it while you're alive. You can use it while you're well. You can use it while you're, if you happen to get sick. And then, of course, you can use it as a love letter in the event that you do pass away.
So in those different instances of where you're talking about different ways you can use it, could you go into detail about that? Because a lot of people think about, well, life insurance is only for when I'm gone. But could you go a little more into each of those scenarios?
Yes, ma'am. Definitely, I can. So one way that you can use life insurance is, of course, for death benefits when you are gone, deceased, right? That's what we like to call your love letter, what you're leaving with your family. But a lot of times people forget to see how you can use life insurance while you're alive. So you can use life insurance. You can actually invest in a life insurance policy called an index universal life insurance, which with that, you can actually get a rate of return guaranteed that's tax-free so that you can use when you retire. Also, you can use life insurance for living benefits. And when I say living benefits, a lot of people don't understand what that means. So things happen every day. And unfortunately, people are getting sick all the time. So living benefits is a benefit with life insurance. If you have that rider, it doesn't come with all policies, but if you have that rider on your policy, then in the event that you get diagnosed with cancer, have a heart attack, stroke, get in an accident and unable to do at least 2 of your everyday living functions, you can actually get up to 90% of your life insurance policy to take care of you while you recover.
Oh, wow. Okay. So could you go into about the different types of life insurance you can get? Because I know you were talking about how some things it has to qualify for, or you have to see if it's in there.
Correct.
So yeah, could you talk about some of those?
Definitely. So you have term life insurance, and then you also have permanent life insurance. And then with term life insurance, what that is that term is just term. It's over a certain grace period, right? So term life insurance is good though, because you can get a lot of money for a lower premium for a set amount of time, whether that's 10, 20, 30-year term, right? Then, of course, you have permanent life insurance that is just that it's permanent. So your premium will be a little bit higher, but you have it for the duration of your life, as well as with permanent life insurance. You also have a cash value aspect with that one.
So would you say that there are like price differences associated with each of those? Like if I want to get either one of those, what are the benefits and the cons for each of those?
Okay, so definitely it is. As I spoke previously, term insurance, the benefit is while you are setting up your finances, right? Right now, you guys are pretty young. So you're still in school. So you're not as financially stable as you are. You're at the peak of your life where you're starting to kind of plan for your future, right? So a term policy is good for everyone, though, regardless of their age, because like I said, you can get a lot of money death benefit for a low premium because it is just for a particular time frame. Permanent life insurance is good for planning. You still can get your coverage. You still can have your love letter in the event something happened, but you're thinking futuristic with it. So what you're doing is that you are investing money in it so that you can also accumulate a cash value policy that you can use once, if you have anything in life. It's not like a 401k or anything that you have to be a certain age, or does it come with any penalties, but you also have cash value that you can use that's tax-free. And then you also can use that money once you retire as income as well, if you don't want to use it while you're still in your working age.
So something I noticed you said was cash value. Could you go into what that is?
Mm-hmm. So cash value is just that. It's cash accumulation value, right? So you think of the best way to describe cash value is when you put your money into a bank. Do you guys know what the rate of return is on a standard savings account?
I think it's around maybe 3-4%.
It's actually like 0.1. But for demonstration purposes, yeah, standard savings is not even 1%. But for standard mathematics, we're going to say 1%, right? So if you put your money inside of a savings account, you're getting 1% rate of return. So you only see what, like 5 cents here, 10 cents here, cash value, depending on how much you have in your account, right? $5 or so. If you put your money inside an index universal life insurance account that accumulate cash value, then on a global market, you're going to get cash value based on what the market is. So you can get anywhere between 0.75, which is still better than a savings, or anywhere up to like 12-13% rate of return. So that's how you kind of grow your cash value with your insurance.
So you're basically saying that it kind of changes with the market.
It does. Everything kind of changes with the market. Taxes, living, everything change with the market. But the best thing about a global market versus the S&P market is that if you invest your money into a strategy with the S&P market, when the market crash, your money crashes well, right? But in an index universal life insurance, by you investing in that global market, if the market crash, you're still safe. You're never going to lose money. So you have guaranteed growth. And then again, like I said, because you're using it on money that's already been taxed, you have no taxes when you actually withdraw your money.
Okay.
That's very interesting. And it's funny because the next question that I was going to have for you, you actually kind of answered it. And why should I consider insurance at a young age? So I'm going to go ahead and go on to what are the benefits of life insurance policy beyond just the death benefit?
So I do still want to answer that question for you, James, though. Why should you get insurance at a young age? Only because a lot of people have that, right? And they may have missed when I was saying it. So the reason why you should get insurance while you're young is because you're healthy, right? And you're young. So of course you're going to get a better premium. And especially, James, if you lock that insurance into a permanent strategy now when you're young, is locked in on your age and your health now, not when you're sick or when you're older, right? But when you are young and you're flourishing in life. And then the second part of your question that you asked was, what was your second question? I'm sorry.
What are the benefits of life insurance beyond life insurance policy beyond the death benefit?
Okay, so the benefit of life insurance beyond the death is, as I mentioned, it does have that living benefits. So you can be sick, but you don't have to be dead. Would you agree with me?
Yeah.
Right. So a lot of people get cancer. A lot of people have heart attack, but they still make it, right? But when they have that heart attack, unfortunately, James and Jalea, you guys would agree with me, they're working. They're still stressed about bills. And most people, they file bankruptcy because of medical expenses. So having a life insurance policy with a living benefit rider on it, in the event that something happened, like a heart attack, stroke, or cancer, or accident where you just can't work. I recently had a friend, her husband got in an accident and had a TBI, traumatic brain injury. He can't work, right? So with having a living benefit such as that, you can use up to 90% of your insurance to actually take care of the medical expenses affiliated with it, but also the personal expenses in life that you have as well. So you can kind of recover without the stress.
Gotcha.
Did that answer your question?
Yeah, that did really answer my question well. I got one more for you. Can life insurance help with student loans?
The thing of it is, it's like, will it help with student loans? And personally, I'm going to say no. Will it help with student loans? I'm going to say yes, right? Because with life insurance, as you invest in it, your money grow. What you decide to do with it is on you. So yes, you can use it for your student loans, but you can also use it to buy a home or a car. So it's what you want to do with it.
Right.
Yep.
All right. Yeah, I was thinking about that when I read the question, like, because I'm already racking up some big student debt,
Mm-hmm.
but I was wondering if I should have put it into my if I should put it into my student loans rather than, shoot for the big, because pretty healthy.
So right now, James, what I would suggest to you is that if you have a index universal life insurance policy, I would sow into it, right? Because that you don't have to pay your student loans until you graduate, post-graduation.
Right.
So while you're still in school, if you're insurance policy, then that money is growing. You're getting that rate of return. So then by the time you graduate, you will have, depending on how much you're investing, you will have money to pay off that student loans, as well as with student loans come interest. So what you would do is you will put your money now inside of the index universal life insurance policy, allow that money to grow. So then post graduation, and then being a financial professional, we can show you how your money grow. So you will put in there based on what you need that growth to be at that time. And then once you finish school, you can continue to pour money in it. And then when you're like, okay, I'm ready to pay off my student loans, you can just get your money and pay off your student loans.
Gotcha. All right.
Mm-hmm. So instead of just spending in a standard savings account, just go ahead and invest in the protection that you need, as well as in the you have the savings. So it's kind of like you getting
So really quick, because I noticed that you were saying that kind of life insurance is kind of like investing. So what would you say is the differences between having a life insurance policy and just normal investing? Or are these the same thing?
Well, it's really not the same thing. I think it still goes back to that protection, right? Because you can invest, but if it's not protected, it's in the event something happened to you, your family can lose it all, correct?
Yes.
So you can invest and you can own properties, you can own cars, you can own stock. But at the end of the day, when something happened to you, what happens to all of that if your family cannot maintain that lifestyle, right? Because most people that have that, your income is also dependent on. So if something were to happen to you, and if it's no protection, then unfortunately your family the loss of those assets. So I always feel like protection is super important, because it really is the key to building a foundation of wealth for your family.
Okay. And go into our next topic, which is like financial considerations. I know you already talked about the benefits of your age, but could you go into more about how that affects your interest rate? I'm sorry, not interest rates. How does that affect your life insurance rates, as well as how your health and lifestyle can affect it?
Of course. So of course, when you're younger, it's good to do anything when you're young, right? You don't have people that decide that they want to play for the NFL or the NBA once they're 50. They do it when they're young because it's when they're the healthiest, is when they're prime time, is when they can give more, right? So when you get your life insurance policy while you're young, premium is lower because of your health. You're healthy. You don't have high blood pressure, you don't have high cholesterol, you don't have diabetes, you don't have any of those things. So it's best to do it while you're young and while you're in the prime, leave it open so that you can get locked into having the rate. And then by doing it permanently, you're locked into that rate permanently. So this is the thing too that I want people to understand. James and Julia, if you guys get a policy now and it's permanent, it doesn't matter what happens to your health. You still need to take care of yourself. We still need to take care of our vessel, but it doesn't matter what happens to your health once you're 30 and 40. You got that policy when you're young. So Lord forbid if you go out here and you do have a heart attack or something happen. Lord forbid if you get cancer, your premium is not affected. But try getting a policy, a permanent policy once you had cancer. Your premium is higher. And if you can get it, it's really going to take a whole lot of advocating on your end.
So basically, it's kind of like, and it's like it's called life insurance, but basically it's kind of like when you get like medical insurance or car insurance, you're trying to prepare yourself from before the incident happens. But then if the incident does happen, then you're ready to go up.
Exactly. And I tell people this all the time. You have car insurance, right? None of us plan on going out to get in a car accident, right? So, but you have that protection. You have medical insurance. Now, I strongly recommend everybody to use that at least once a year to make sure you have your physical. But you don't get medical insurance like, oh yeah, I'm gonna get medical insurance on this day, and then 2 weeks later I'm gonna get sick. You don't plan for that. You get it because you want to be protected. We have dental insurance. I pray everybody is going every 6 months for their checkup, but you get it as a preventative measure. So you need to look at insurance too as a protection preventative measure. In the event that something happened to you, you want to be protected. Recently, my husband and I was traveling back from Houston on a business trip, and it was really, really windy, and we experienced some turbulence, and then the plane dropped out of the sky a little bit. And it was scary. I'm not going to lie. It was extremely scary. And the people on the plane, some people screaming. Me personally, I was just praying and stuff like that. And once we got level grounded, again, I asked my husband, was he okay? He asked me, was I okay? And I said, what was the first thing that you thought of when it happened? And he said, the first thing I thought of is that if something were to happen to us, that our 3 kids is protected, that they can continue to live the lifestyle that they live now, if not better. My 20-year-old that goes to Norfolk State wouldn't have to drop out of college. My 12-year-old who danced for a company locally here, she wouldn't have to stop dancing. And my son, whose wife, him and his wife will be okay. And any future grandkids that I have to come will be okay. Yes, they will miss me and my husband dearly, but we still will be able to build a legacy even through our death. And that's what I don't think people really understand, older people. And then I don't think younger people understand that even though you're not married yet, even though you're not grown yet, you still have someone that loves you dearly that will be affected by your loss, right? But you want your family to be able to grieve you, yes, but you also want them to have that peace of mind that you left them a love letter because you loved them enough to make sure that they was taken care of.
And that's an interesting thing to talk about too, because I know like a lot of times us as young people, we're like, even if we do pass away, a lot of times we don't think about the costs associated with that because we're like, we don't really have a lot anyway. So even if we do disappear or something like that, it may not have a lot of financial impact. But
it does. That don't go away just because you go away. So you both, may or may not have student loans. But if something were to happen to you, then who is those student loans going to fall on? If you have a car payment, who is that car payment going to fall on? You see what I'm saying? So you really have to think about that. And a lot of people, they lose their homes and they lose their lifestyle because someone died unexpectedly. And then they're doing a GoFundMe, they're trying to do a fish fry and all of that stuff to raise money when you can simply just get a small life insurance policy to make sure that your family don't have to experience that.
I see exactly what you're saying. And so could you talk about for somebody who was trying to get life insurance now, how exactly can I afford life insurance?
So life insurance is affordable depending, and you guys are young. So I'm gonna say definitely for you guys, life insurance is very affordable, right? You're super young. So All you have to do is contact a financial professional. I am one, so you can contact me, or if you have one, reach out to who you have, right? Contact a financial professional, sit down with them, do a financial analysis so they can actually review your finances and consider exactly how much coverage you would need and actually get you set up with a policy.
Okay. And then from the top of your mind, if you can, could you give me an idea about like how much monthly somebody would have to pay like around our age? If you
Well,
know.
I don't have to do it from the top of my head. I'm actually going to ask you a few questions and then I'm going to let you know, okay?
Okay.
Yeah, so we're gonna do it accuracy. And we're gonna do a little bit of accuracy because if I do it off the top of my head, someone might be like, well, that's just an estimate. So I'm gonna
Yeah.
give you the actual amount so then you'll know for sure. And nothing personal that I'm gonna ask you, but I am gonna ask you a little bit of information and then I'm gonna tell you this based on if you wanted to get and I hope you guys don't lose me. Okay, I'm still here, right?
Yeah.
Yes.
Okay, because I got to use my laptop. So it's going to be super, super quick. And then you'll also see exactly how easy it is to try to get a life insurance quote, right? So it's kind of like a win-win situation. And I do
Okay.
apologize
Thank you.
you're welcome. I do apologize for the little disruption. As I had told you, my daughter is trying to get situated to take her tests.
No problem whatsoever.
All right, so it is pulling up.
Mm-hmm.
So your name is up there. So I ask you your name. Normally I wouldn't ask you your name for privacy purposes since we are literally doing this live, right? But
Yeah.
I'll ask you your name. Well, I know your name, but I'll put your name in here. All right, what is your date of birth?
August 30th, 2003.
August, you said 30th,
Yes.
2003. All right, you are female. You are 20. Do you mind if I ask you what's your height and weight? Are you okay with that?
Yeah, I'm 5'7", and my weight is 150.
Okay. Just waiting for my computer. Thank you guys for your patience.
Of course.
Mm-hmm.
This is fun. This is fun.
Thank you. All right. So you are female, you're 5'7", and you are how much do you weigh?
150.
150. Perfect. So in the insurance, just to let you know, if you never thought you was all that in a bag of chips, in the insurance world, with your health, your height, and your weight, you are definitely all that in a bag of chips. All right. So let's just, because you're a student, you want to get like a term policy, right? And let's just say you are doing a term policy because we do want to make sure we do want those living benefits on it just in the event that something happened to you, as I spoke of. All right. And Jalea, I'm gonna just start you off with about how much student loan debt would you say you have?
I don't have any, but we can make up a number. Let's
Yep.
say 10,000.
All right. So let's say you have 10,000 student loan debt. You don't have a car or anything like that. Well, you do have a car, but it's paid off. So that's good. So let's say we're going to look for you about $250,000 worth of insurance coverage. Okay. We're going to do a term policy for 30 years. So that coverage is going to be good for 30 years. You have actually, time to convert that over. That's the key. When you have a term policy, you actually have time to convert it over to a permanent policy. So a term is definitely just to help you get on your feet and have some coverage, right?
Yeah, and then by the time we get out of school, we should have a good paying job to be able to pay for the permanent, right?
Yep, but you can convert it over too. So for you, Jalea, you are 20. You do not smoke. I didn't ask you that, but I just knew that because I have a relationship with you. So coverage, and in case something happened to you with living benefits. Remember, we talked about that living benefits if something were to happen. For 10 years, your policy is $12.04 a month. For 25 years, your policy is only $14.84 a month. And if you wanted that for 30 years, your policy is only $16.13 a month. So it's really reasonable. It's really affordable.
Yeah.
Yeah, I went to Chipotle and Starbucks and spent way more than that in one visit.
No, really.
For real. I say for real.
Yes, yes. And then the beauty thing about that, Julia, in case you was like, well, you know what? I really can afford that. Like, that's really reasonable. And you're like, actually, I have a little bit more that I can invest. For $100 a month, you actually can get the permanent index universal life insurance policy that I was telling you. So it's not expensive. And that's why I tell people, if you ask anyone that's 20, because so if you ask someone that's 20, if I could give you a policy for $16.13 a month, would you do it to leave your family a love letter in event something happened to you? You guys would agree with me. I think they would say yes.
Yeah.
Right. Yeah.
And then not only that, but so based on what you were saying, how would I know if how I want to basically build my policy? Because I know like you were saying that there's certain amounts of money associated with the number of years that you do it. So or something like that, I believe. So how exactly would I know how much money do I want in my life insurance?
So to actually to determine how much coverage you need, is that what you're asking?
Yes.
Okay. So us personally, with the firm that I work with, we do this method called the dime method. So we would determine your debt, your income, your mortgage, if you have a mortgage, children. Because even if you have children, you guys, I'm sure you would agree with me, you would still want them, even in the premature loss of you, still want to make sure they have funding for college. So we actually do a formula that we actually have to make sure that our families is well protected. Because a lot of people have coverage, and I'm glad you asked that, because a lot of people have coverage, but they don't have enough, right? So we want to make sure that you actually do have enough. So we look at your debt, your income, your mortgage, and education for any children that you have.
So if I'm just like I said, I'm a regular student and I wanted to get a policy, let's say so I'm going for term policy, but I'm only getting enough for me right now. Would you say I'll be able to increase the amount later with no penalties?
Definitely. Being a financial professional, I can only speak for the prestigious financial firm that I'm with, but we actually meet with our clients annually just to see if there's any changes in their lifestyle in case they need to add additional coverage.
That's good then.
Professional. It shouldn't be that you get a life insurance policy when you're 20 and then you have no type of contact with them ever. Your financial professional should reach out to you every year just to see if there's anything changed, good, bad, or indifference.
Okay, thank you.
Yeah.
And then I guess what would you happen if, let's say, I do monthly payments and I miss a payment?
Okay. We have this thing called a grace period, right? So if you have a term policy, your grace period comes in effect. Life be life, and sometimes I'm sure you guys will agree. So with that grace period, you have about 30 days to be able to make that policy. So as long as you don't just continue to miss a policy, then you actually have a grace period with your insurance company. If you have a policy that actually generates cash value, then they'll actually take the policy premium from the cash value, so you don't lose anything. But financial professional that you know, because I will contact you and be like, hey Julia, I noticed that you missed your premium for your policy. Just first off, want to make sure that you're okay, and second off, I just want to remind you of your grace period that you have, and I would inform you of what your grace period is.
Okay. So first, then I'd like to ask, I know you said something about before, I think you said life insurance is not taxable, or is it taxable?
So no, you pay life insurance on pre-tax money, correct? Well, I'm saying correct, but you might not know the answer. So you pay life insurance on pre-tax money. Anything like a 401k, you pay that on, you pay life insurance on post-tax money. So it's already taxed. It's money that you make that is already taxed. A 401k, you pay pre-tax. So you're going to pay taxes now. with life insurance, the cash value on the life insurance is not taxed because it's not earnings. You pay tax on the money that you earn for a living, but life insurance is not earnings. So you don't pay any on the cash accumulation in life insurance. Did I answer that question?
Yes.
For you? Okay. Want to make sure you're clear. A lot of people, they say, well, how can life insurance save you on taxes? Life insurance save you on taxes because right now you're making money, but the taxes are really lower. People like to think taxes are high, but they're only going to continue to go up every year. So imagine what taxes are going to be by the time you guys retire. So you're paying you're paying life insurance on pre-tax, on post. Keep saying pre. You're paying life insurance on post-tax money. It's money that's already been taxed. So once you actually get your taxes on that, it's already been taxed.
Okay.
Gotcha. I mean, by the time we're retired, of course, taxes are gonna be like 40%. So we'll be fine though. We're gonna be rich. So
you guys are gonna be rich. You guys are gonna invest in IULs, and you guys are gonna be rich. Yes, but yeah. So that's what a lot of people I get a lot like, oh, I have a 401k, and I'm like, yeah, but you haven't paid any taxes on that money yet. So imagine how much taxes you're gonna pay. You're literally gonna have half of what you think you have, which is not a good place to be, right?
That's actually funny. I was that's not part of our questions, but if you had a 401k, does the taxes hit you all at once when you want to tap into money?
So that I honestly, I'm just being honest. I don't know that how much you pull out, because some people pull out a little at a time. So I'm almost sure that you only get off what you withdraw, because while it's sitting there, you don't pay any taxes on it. Right. So once you withdraw it, of course, you pay taxes on it, and it's whatever the taxes are at that time, which are definitely going to be higher than what taxes are now.
Right. Okay, cool.
So I'm not against 401. I want to say this though. I'm not against 401k. If you have it, your employee match it, definitely invest in it, but don't put all your eggs in one basket. Does that make sense?
Yeah, that makes sense. Yeah. Don't bet all on one horse. But you can bet on all of them. So I think you kind of also answered this, but if we want to touch back on it again, how much life insurance do I need? But it seems like you have a system where you're able to calculate that.
That is correct. Yep.
Right. So instead, I'm going to go to, how do I choose a life insurance policy?
What do you mean? How do you choose?
So
like term versus permanent?
Less, because yeah, kind of like that. I think that's where I'm going with. Yeah, that's where I'm going with that. Like when I go up to like pick a life insurance policy, how does that choosing process normally take?
Okay, so the thing of it is that you first want to tell your financial professional will ask you, what are you wanting to do with your policy? Some people are already rich. They don't want cash accumulation, right? Some people, they want it for education. Some people want it for a house. Some people want it so me, in my case, it's like once I retire, I want to be just retired, right? So it really just depends on the strategy the vehicle that you get in is going to determine what you want for it. Because if you think about it, and my mentor, she said this weekend, and it was like mind blowing. She said, if you want to get from Virginia to Atlanta, a Tesla can take you there, but a Pontiac can take you there too, right? So you're going to get there either way, but how do you want to get there? Do you want to have financial freedom? Do you want to have a lifestyle freedom? Or do you just want to have it so that you only have the death benefit? Because that's what determines your policy. If you have a term policy, you have the death benefit. If you have an index universal life insurance policy, you have the cash accumulation. So you can use it while you're here. So, and it just depends on what you want your policy to do for you. I hope I answer your question.
Yeah, you answered it. Yeah. Now, I got a fun question for you. I want to explore the world, travel the country, and I have no I'm not living at home. I'm not living in a house. I'm doing nothing but traveling. You
Mm-hmm.
know, I got a good bit of money, and I want to go everywhere. If I was single and had no dependents, should I still invest in a life insurance?
Definitely.
Definitely.
Someone has to bury you. So even though you're alone, and I know that sounds bad, so I'm sorry, but even
No.
if you're alone, you're single, you living your best life, your bachelor life, at the end of the day, when you close your eyes, someone has to bury you. You don't want to leave that burden on anyone, right?
Right.
When
So
you
I
feel,
can sign it over to like the flight attendant who was on my last flight. But as long as I
well,
close my
you're
eyes,
you're
it's good for it.
I wouldn't recommend your flight attendant, but you have a beneficiary, right? You will have a
Yeah.
beneficiary. And with that, you would determine with your beneficiary, who do you trust to
Mhm.
be financially over your estate when you're no longer here. And
And
that could be a parent, it could be a sibling, it could be a wife if you're married, or
friends would
a close
a
friend.
very close friend, very
Yeah,
like
close.
someone you've known forever.
Yes.
Right.
Yeah,
Right.
because I noticed that the same thing is also with like savings accounts and stuff like that. Because I opened a savings account or a CD at one point, and they asked me who I want for my beneficiary.
Hmm.
And I noticed that that's probably something they do a lot of the times when you open different accounts with money.
Right.
Correct. Correct.
Right. And is life insurance through your employer enough?
No.
No. Right.
I'll
Right.
always say no. Your employer is a term policy for one. So if you leave them, no coverage, right? But also is not enough.
Mhm.
It's not enough. You want to make sure that your family is definitely taken care of, right? So if your debt, your income being replaced. When I say income, I mean your income being replaced, right? So if your debt, your income being replaced for a few years, not just 1 year, because you want your family to have time to get on their feet. Your
Right.
mortgage, and if you have children, their education, if that equal up to $1 million policy, your insurance, your job is not going to give you $1 million policy. They're going to give you enough to make sure that you can be properly buried, and they'll give you a little bit so it can kind of help your family along the way, but they're still going to feel that pinch. You want to make sure that you leave your family with enough coverage so even though they're grieving you, they can continue to live that lifestyle. It's sad to have to bury someone and then end up losing your home, right? And I'll share a little bit of story on that. So my husband and I, early on, we lost a daughter, right? And with that, we had outside life insurance for her. Of course, he had life insurance on his job too, right? And once we had lost her, of course, we had to utilize our life insurance. But to her funeral, the day that we buried her, a representative actually came from his job to inform him that his job decided to go overseas. So he decided to stay in the States with his family. So he lost his daughter, but he also lost his job. So if we would have only had that little bit of life insurance coverage on his job, which your life insurance only give your children what, like $10,000, which is not a lot of money. If we would have only had that little bit of $10,000 for his job, her funeral costs more than that.
Right.
We wouldn't have had anything. So her policy allowed us to bury her, but also it made sure that we was financially good and stable until my husband was able to find another job.
Right. Right.
And to
It,
be honest, because a lot of times, like we are in, like when we think about death, we don't really know like a cost associated with it. Most time it's kind of like, I don't really know, like, could you go in more into depth about what are the costs that are really associated with it? Because a lot of times we don't really know.
Oh, sorry. I just
no,
want
no,
to, because it was a little personal, but my father passed away a couple of months ago. He had
no.
a bit of a heart problem during a
So
certain
sorry for your loss.
and years as well. I wanted to comment on that.
Thank you.
What's it called? I do know. I don't know too much. It was a tough time, but I do know there is a lot between funeral homes, cost of burial, any sort of funeral arrangement. showings, anything you need to do. It is a lot to take into it, where you're gonna host the air, what church you're gonna host it in, from the motorcade that has to take you there.
Yeah.
There's a lot of bits and pieces. Now, I think luckily for my family, due to his job, due to where he was, I think they were able to pay for most of that.
Mm-hmm.
So, it wasn't such a financial strain, but yeah, it was, it's a lot. There's a lot of things, but you can probably go a little more into depth.
No, it's definitely a lot. The average cost of a funeral, recently my mom and my mom wanted to just go ahead. She has siblings. So she was like, I don't want you guys to have to worry about that. My mom is healthy, thank God, but she just wanted to go ahead and just make all of her arrangements, right? So I can just tell you at that time, and just like everything else, stuff go up. So at that time when we made all of her arrangements, and because she made them, she's locked into that price. It was about between $15,000 to $20,000.
Wow.
Yeah. And she didn't go, because, not trying to be funny, now funerals are very elaborate. She didn't do elaborate. She don't have a horse and a carriage taking her in, like I've seen. She didn't do anything elaborate, but James is absolutely right. Depending on, you can spend a lot of money on a funeral. So depending on how elaborate you want it, how many viewings you want it, where you want it held at, all of that stuff goes into effect. Because some churches actually charge for the service itself. So a lot of people don't really think about that, right? So it can definitely get up. And then, like I said, along with that is the loss of income. Was your dad retired?
No, the job he was currently working in paid a lot. It was paid a lot. It was government.
No, which is good that they paid a lot, but they're not paying his salary.
Sorry, you paused.
Okay. I said it's good that they paid a lot, but they're not still paying you guys his salary. Would you agree?
I don't know too much. I don't think so.
Okay.
I don't know too much.
Yeah. Yeah. Unless he was at the point of retirement and had a pension.
No.
Right.
No. He had just started the job. He just started the job a year ago. He was a Marine Corps vet.
Oh, okay.
He worked and before this job, he worked in the State Department. So
so it's good when you have a nice paying job that will make sure that you have a policy. But they're not gonna, especially if you're not retired, if you're still working age, they're not gonna continue to pay your family a salary for a few years to just hold them off until they get themselves together. So a loss can definitely be detrimental in that case.
Right.
Yeah. And people don't loss of income when someone passed, but it's like you have that loss of income too. So where are you going to get that money from? The average person make about $50,000 a year. So where are you going to get that extra $50,000 from? And that's low key $50,000, but where are you going to get that extra $50,000 from when they pass if you don't have a life insurance policy? So then now you have the funeral expense plus the additional $50,000 that a year that you're no longer getting. So that's the importance of having protection.
Mm-hmm.
So back to investing, or if I had the cash value that I want to take out on my life insurance policy, how exactly would I invest that?
Say that one more time.
So I believe you said cash value is what it is for a life insurance policy that you can take out. So if I wanted to invest that, how would I do that?
I guess I'm confused. Are you saying if you want to invest money into your cash value, or if you want to withdraw money out of your cash value?
Okay, so I guess maybe I got it confused, because when the cash value is in your policy, is that already it being invested, or you have to take it out to invest it?
No, you're investing into your life insurance policy. That's how you accumulate the cash value. So when you want to, so when you take it out, that's actually called a withdrawal. Just like if you go to the bank, you do a withdrawal, right? You're actually doing a withdrawal. You would just call your agent. So you would call and be like, hey, Crystal, I see I have $50,000 of cash value. I would like to purchase a home. Or you don't have to tell me why it's your money, but you're like, I'm at the point where I want to purchase a home. I would like to withdraw $30,000 of my policy. I would just put that claim in for you to get it, and you would get it.
Oh, so basically it's kind of like it's like its own stocks and bonds, I guess, in a way. It's basically it accumulates or it compounds interest on its own already being in the policy.
Correct.
Okay. I understand then.
Mhm. So you
Hmm.
yourself, it's not like if you have a Robinhood or Edward Jones account where you have to say, I want my money to go be invested here, 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 here. It's not like that.
Okay.
Yeah.
That makes a lot
It's
more sense.
literally is you don't have to invest that much time or energy into it. You set up your policy, you literally make money while you sleep. You set up your policy and it takes care of itself as long as you're making sure that you're on your premium.
Okay.
Yeah, because I know one time my husband, he was like in an investment group and they would meet every month and said, oh, this month we're doing here, we're going to trade and do here and all of this stuff. That stuff is so over my head when it comes to that. I have to keep it simple. I always say, kiss, keep it simple, right? Keep it simple. So like in your and I always say invest versus pay because that's what you're doing. You're investing in yourself, right? With the life insurance policy. So once you invest and get yourself a life insurance policy, it takes care of itself.
Okay.
With the
So if
help
I
of your financial professional actually meeting with you yearly to make sure that you have enough of what you need.
Yeah, so going off base where you just ended off there. So I want to start. So how would I do that? Do I just look for a financial like who like where do I go to get
Yeah.
started?
So if you are in a situation where you're like, I want to start a policy up now to make sure that I'm good, you could just reach out to me or any other financial professional, and they can get you set up. And then if you're on the end like, wow, Crystal, what you do is super easy. I want to do what you do. Just reach out to me or any financial professional you have, and they can get you on that road too. So it's always opportunity.
So if I wanted to basically so basically I see you're saying first look for somebody who's in the space and basically just create a meeting with them. And then what would you say would be the first thing like what should you expect once you already started your account? Kind of like let it sit for a while until you need it, kind of like an emergency savings in a way for when you're trying to get something, not emergency savings, but kind of like your long-term savings for like house, car and stuff like that. So just leave it alone until you need any of that kind of stuff, right?
Right. It's not a savings account and it's not your bank account. So it's not like every month or so you're going in to withdraw um cash value all of your account. It's definitely it shouldn't be your mean of income, if that makes sense, right? Um
Yeah.
right. So of course the primary reason for it is for if it's a term policy, it's just a death benefit. But once you have cash value, you're at a point in your life when you need it, then use it. But I would definitely say don't go into it with a mindset like, oh, every $20,000 I'm gonna withdraw my cash value, right? Don't go into that
Yeah.
mindset. Go into a more like it's protection. It's there when you need it. When I want to purchase a home, if I want to use it, then I can. When I retire, if I want to use it, then I can. If I have enough money, I mean, we can go on and on. If I have enough money and I want to take some of that money out and open up an annuity or something like that, you can. You see what I'm saying? So look at it more of an investment because that's what it is. Life insurance is an investment in yourself more than it's definitely not like a savings or checking account.
Yeah, because I'm thinking that basically, well, I had a question, but I forgot what it was. But you can continue, James.
You're muted. I'm sorry.
I saw that and I did not notice. It was a yeah. Oh, I was just gonna say, yeah, that was pretty. It was pretty. Uh, I had the same questions that she was having, and I'm glad they were covered. It was very interesting. Now, I did want to
Mhm.
ask, so since we're going to be starting to close,
Mhm.
based on where you are now, what would you tell your younger self that about what you have seen before they hit that spot?
So it's very funny that you asked that question because me and some of my colleagues was literally just talking about that this weekend. I believe
Wow.
timing is everything, right? And information can be readily accessible to you, but until you are mentally and maturely in that space, you're not going to receive it. So I definitely wish when I was you guys' age, someone would have introduced me to this information, because I know I would have invested sooner than I was. But as far as being an actual professional, financial professional, I probably wouldn't have done it, just being honest then, because that wasn't my mindset at that time. But I know if someone would have introduced me into having a index universal life insurance policy in my 20s, I would have did it, because by the time I would have been 40, depending on how much you're investing, I would have been a millionaire. So I definitely would have did it. I definitely would have did it.
It sounds like I need to start investing right away.
I'm about to start right after this podcast.
Yeah, so it's definitely possible. Like I said, my daughter, she is actually a student at Norfolk State, and she has a index universal life insurance policy. My son, who is married, he has one, and my 12-year-old has one as well. So you're never too young. Of course, my 12-year-old, we manage her account. My two adult children's, they manage their account. But yeah, we with the prestigious financial firm that I'm with, we believe in own, join, share, because you can't share something with someone that you don't own yourself. So I can proudly say that before I even was an agent, a financial professional agent, I actually owned 5 strategies to make sure that we would be financially straight. And now that I'm an agent, of course, I'm even more like on fire to share with people, mostly because I've seen what it has done for me and my family's lives.
Awesome.
That's great to know.
Yeah. Well, thank you for joining us today, sharing your knowledge on life insurance.
Yes. Thank you guys for having me.
Of course.
We appreciate you for coming.
Oh, absolutely. Absolutely. Yes. And if you guys do not have a financial professional and you would like to sit down and talk, just reach out to me and let me know. I'll be more than happy to go over some stuff with you guys and see if it's something that you're interested in. If you know anyone that you know is looking for a financial professional, definitely refer them to me as well, because my goal is to make sure that the battle against poverty that we face and that we are facing, that is eliminated. No
And
families.
actually, would you be okay with giving us your email? We can put it at in the description box of the
Oh yeah, put my email in the chat.
Great.
Yes, I can do it afterward. Yes.
Oh yeah.
Yeah, of course. I was gonna say, do you want to shout out your where you work for again?
Yeah. So my name is Crystal Madison Worrell. My husband's name is Paul Kendrick Worrell, and we are actually financial professionals with Worrell Financial Group, and we are located. Our home office is in Virginia Beach, Virginia.
Awesome.
That's great to know.
Yeah, yeah. And then Julia, you have my email and you have my phone number. So if you want to put it in the description so people can contact me, absolutely, you can do that.
Okay. Thank you.
No problem. Just use the Worrell Financial Group email, because you have my personal email too.
Okay.
So yeah, so just use the email that has the WFG in there.
Okay. Thank you.
Yes, ma'am.
All right. And if any of you are listening and would like to connect with us and continue the conversation, please don't forget to follow us on social media. The links are in the bio, and you can also join our Discord when it comes up. I don't know if it's still up yet, but it is in the process.
Yes.
That way you can join in our conversation before it happens. And if you have any questions already on the list. So before you leave, don't forget to like, subscribe, ring the bell, and share.
Yes.
Thank you.
Thank you guys. Have a blessed day.
You as well.
You too.